Good morning, everyone. Welcome to Officer 24/7. My name is Neharka Walia Bhatnagar, and I'm with you with the area of ABFM. And what are we talking about today? We are done with the uh, almost the entire module C. This is the last chapter of module C, deal structuring and financial strategies. Once we are done with this particular topic, then we will start with the specific area of revision of this topic only. That means entire module C. So what are we talking about today? When we talk about this specific topic of deal structuring and financial strategies. Acha, what do you mean by deal structuring? What do you mean by the term deal structuring, everyone? We are having a deal where we might be having a merger, acquisition, all those things, restructuring, whatever we are deciding, we have to look forward towards that area where we are getting clear about it. Now, to the time we are not clear about what we are dealing with, and are we making the compensation in cash or in the form of shares? What are the taxation based scenarios where we are going to work upon, है ना? All those things has to be taken into consideration. Only and only then we can look forward towards the entire area, isn't it? So that is related to this particular chapter, deal structuring and financial strategies. So here comes the first question. Everyone, what would be the answer to this question, everyone? What does the process of deal structuring and acquisition involve primarily? Firstly, what does it include? Is it the determining the target liabilities or allocating risks and achieving major objectives or finalizing the payment method or obtaining financial options? What's the first and the foremost thing that they have to see? When we talk about what is the process of deal structuring in acquisitions. Acha, acquisition means purchase. We are acquiring the other organization. If you're acquiring the other organization, then one of the major things is the first thing is always looking at the objectives, na everyone. So this is related to the area of allocating the risks and achieving major objectives. So in this case, the first and the foremost thing is always allocating of the risks and achieving the major objectives. What is risk sharing in context with deal structuring? Acha, risk is something that the more you distribute, the lesser it becomes. This is one of the realities of risk. Sharing profits equally between the acquirer and the target, distributing the liabilities of the target organization to the acquiring company, allocating risk between the parties involved, or splitting ownership rights and responsibilities. What do you mean by the term risk sharing? Of course, risk sharing plays a very important role in every organization. See, because till the time you're not sharing the risk among different people. For example, banks do this part, refinancing, syndicate loans, all those things happen because banks know that sometimes it's not possible or worth it to take all the risks on their own. You know? So in this case, this is based upon allocating the risk between the parties involved. Okay? Because we are spreading up the risk among different people. This is spreading up of risk. In the context of acquisition, what is the overall consideration method? Payment, approval, risk, allocation. In context of acquisition, acquisition means acquiring again. What is the process? What is the overall consideration method? How do we pay everyone? Payment method, consideration, or approval, risk allocation, or financing. It is the payment method. Consideration means what? What are we going to pay for that particular company that we are trying to buy? Right? Next point. Why is the corporate structure frequently utilized as the acquisition vehicle? Limited liability and flexibility in financing, tax-free deal options only, continuity of ownership only, or taxation benefits only. Corporate structure frequently utilized as the acquisition vehicle. Corporate structure is basically the organization structure which we are talking about, and once we change the restructuring and other things, then obviously this is something which changes, you know. So why is this particular thing done when we're talking about acquisition vehicle? In terms of acquisition vehicle, the correct answer here it would be limited liability and flexibility in financing. That's the answer. What is the primary consideration for using cash in the form of payment acquisition, everyone? What is the primary consideration for using the cash as a form of payment and acquisition? In terms of this, is it borrowing capacity of the target company, high credit rating of the acquirer, desire to preserve control after the acquisition, or size of the acquirer's cash balances? What's going to be the answer? See, the point is what is the primary consideration in terms of cash payment? Whenever we are making the payments, what is that particular thing? Ultimately, when we are making the consideration payment, it is always a desire to preserve control after the acquisition. After you purchase the other organization, you really want to still maintain your control in the other organization, because ultimately, the day you lose control, the organization's hold that you have or you possess is gone. Why do the acquirers with large cash holdings tend to make stock offers rather than cash offers? Target preference for acquirer stock, desire for tax benefits, preservation of control, or low credit rating of the acquirer. If you have low credit rating, then obviously the chances are less that someone else will basically take your money or involve with your company. So technically, this is something I'm ruling out altogether. Why do acquirers with large cash holdings tend to make stock offers rather than the cash offers? Desire for tax benefits? Not really. Vise to this is a part of it, because when you are giving shares instead of shares, in terms of amalgamation, yes, there is no taxation. Preservation of control, it doesn't really matter, because if you're giving shares to someone, then your control is gone. So eliminating this part as well. Target preference of the acquirer stock. So that means I had an eye on your shares, and I'm like, okay, if I'm getting a chance, I will buy your shares. That's the point. Target preference for acquirer's stock, everyone. Acha, next question. What might lead an acquirer to choose cash in the primary form of payment in acquisition? Why would someone take cash? Technically, when you are, so this is acquiring, but in terms of amalgamation, we have a different scenario. In terms of amalgamation, what happens is, even if you paid a single penny of cash, the entire transaction becomes taxable. If you do not pay in terms of shares, you give it in the form of cash or any other kind, then it is taxable. But if instead of shares of one company, you get shares of another company, then there is no problem. Since there is just a movement of shares, then there is a point where there is no capital gains on it. Matlab, because obviously you still have asset of one company to asset of another company. There is no difference coming up now. There is no overvaluation of target shares. Acha nahi. Well, this is what I'll talk about, the era of capital gains. Okay. So that is capital gains. In terms of acquisition, it is definitely different. The one which is selling is subjected to tax, but the one who's buying is not subject to any tax till the time he's not selling it. Done? Okay. Then overvaluation of the target shares or low credit rating of the acquirer. Then is fear of undervalued shares or desire for tax-free transactions. What's going to be the answer? What might lead an acquirer to choose cash? If someone is choosing cash, then probably because they choose as the primary. Overvaluation of target shares is not the answer. Acquirer means the one who's purchasing, है ना? The one who's purchasing, for them, shares is a different scenario. Low credit rating of the acquirer. If they have a low credit rating, then they cannot look forward towards that. Fear of undervalued share. This can be a point. Obviously, if you think that the shares might not be at its true value, then it can be a different scenario. And then is desire for tax-free transactions. I think in this case, the answer has to be D only. You have a desire for tax-free transactions. You sometimes just play with the cash, and you sometimes don't even show that there's a movement of cash. Next question. Why might acquirer stock be used as a principal form of payment in acquisition with a long integration period? If you're looking forward towards long integration period, desire for tax-free transactions, potential reduction in existing shareholder base, or reduction in total debt needed for the takeover, or fear of undervalued shares. Long integration period. Why would someone actually take a long integration period? Actually, no, when you want a long integration period, probably you have some liabilities which you want to take care of. You know, that can be the point, won't it be? So in this case, reduction in the total debt needed for the takeover. You really want that, because tax-free transactions is not the point where you're looking forward to long integration period. No, potential reduction in existing shareholder base. No, this is actually share reduction, but this is not the point. Fear of undervaluation is also not there. In this case, it's all about you just want to reduce your total debt before needed for the takeover. Because if you want to take over, or anybody else is trying to take over, always remember, if the liabilities are too much, then what will you do? We'll be stuck with that thought. Ki, Arey, the liabilities are already too much. How will we cater the entire work? Right? Genuine problem. I'm sorry. So let's move on towards the next question now. Oh, this is actually in a mixed. Uh, the term is in. In a mixed or payment offer, why might the target company prefer the combination of cash and acquirer stock? What would be the reason? Why would someone look forward to what's mixed? But when we are looking forward towards the cash now, obviously, if we buy, if we are just getting the shares of that in terms of while making the payment, that the problem would arise, because in this case, the major problem that would occur is that in this case, you want to have tax-free transactions, no need for cash. Basically, the tax-free transactions aren't there at all. There is no undervaluation or overvaluation. In this case, you need money so that you can actually, first is you have the particular organization. Second is, in this organization, it has become specific working there. What we would definitely want is that when we have to pay for the shares, we can pay from the money itself, rather than selling a share to arrange the funds for the particular transaction. That is better than in this case, need for cash to pay taxes on the sale of shares. That would be the answer. How does a multiple option bidding strategy generate uncertainty? What would be the answer to this question, everyone? By predicting the total amount of cash required, by predicting the number of shareholders choosing each option, by incorporating a proration clause, or by reducing the overvaluation of acquirer shares. How does the multiple option bidding strategy generate uncertainty? Basically, it is generating too much of uncertainty because in this case, we are determining the number of shareholders choosing each option. Okay, this makes the entire thing very uncertain in nature. What provision in the merger agreements and tender offers help acquirers determine the total amount of cash they would be required to pay out, everyone? Overvaluation clause, proration clause, dilution clause, or convertible securities clause? Which specific clause? That is proration clause. Overvaluation is the valuing it at more than the share price. Dilution means giving up on that particular portion of your the core. We are actually giving up the shares to someone else. And convertible securities matlab the shares can be converted into debentures. Sorry, debentures can be converted into shares, because every time an organization will always try to convert their loans into shares. That is proration clause. Why might bidders hesitate to use stock over offer convertible debt as a form of payment? To avoid proration of shares, to reduce the overvaluation of acquirer shares, to facilitate tax-free transactions, or to indicate their belief in the nature of the target company. We are always doing this scenario so that we can actually reduce the overvaluation of the acquirer shares. Because if there is an overvaluation, the chances are high that later on the organization might be facing backlash from the market itself, right? Okay, so in this case, what's going to be the answer? The answer will be D. Done. Chaliye. Then let's move on towards the next topic. When is a transaction considered taxable to the shareholders of the target company? Everyone? What's going to be the answer? When it involves a majority of the consideration in the form of equity, when it involves a majority of consideration in the form of cash, debt, or something other than equity, when it involves a majority of consideration in the form of convertible securities, or when it involves a majority of consideration in the form of stock. The answer is when there is a mix of all these things: cash, debt, and something other than equity. You with the area of ABFM. Today we are going to talk about the topic of deal structuring. We're continuing with that particular topic, and after this we would be looking forward towards revision of the entire module C altogether, mixed questions, so that you get to know what kind of mixed questions are also there, as we are already done with this entire chapter. So we are actually done with the entire module C. After this, we'll start with the module D, and boom, we'll be done with the entire syllabus of ABFM once. Let's see after this what are we going to bring up. Till then, if you haven't liked this entire series, then please go ahead and like it, and don't forget to share it among your peers. It is very important that we get some kind of recognition, motivation, so that we can continue our work with the same zeal. So that's a request. Okay, till then, we're done with the entire module A, entire module B, entire module C. Now covering the area of module C, the last chapter, and then I'll be pursuing towards the last part. That is, I think I can bring up some mixed questions as well of the entire 3 modules. That will make things interesting for you as well, right? So here comes the first question, everyone. The first question is regarding MAT. Heard about this? Availability of MAT credit. When we talk about availability of MAT credit, this is given in our book. Okay, so what do you mean by the term MAT, everyone? Is it a minimum assessment tax? Is it the point of minimum allowable tax, minimum alternate tax, or minimum assessment tax? In this area, when we talk about assessment, allowable, alternate, or assessment again, acha, math, this is maximum. The MAT is actually minimum alternate tax. Okay? When MAT is levied on the companies, it is called minimum alternate tax. When MAT is levied on you and me, on us, it is called AMT, alternate minimum tax. And this is minimum alternate tax. What is the acronym of LLP stands for in case of merger of a limited liability partnership into a company? LLP is basically a limited license partnership, legal lease partnership, limited liability partnership, or long term. Oh, this question itself had the answer. The answer is limited liability partnership. This is also kind of partnership which started in, I think, 2008, I believe. So this is a form of partnership which is actually a mix of two things. First is Companies Act, where we had companies, and Partnership Act, which was about partners. So they wanted to introduce limited liability in partnership, where it used to have unlimited liability. So then they came up with this ideology of this kind of body, which would be working like a company but will be having the status of partnership, where one particular partner will have complete unlimited liability and all of the partners will have limited liability. Okay. Okay, here comes the next question, everyone. Please go ahead and answer. In tax issues related to M&A transactions, which is often a key consideration in terms of Section 47 of the Income Tax Act. Everybody? Shareholders approve concerns, compliance with ITA provisions, flexibility in interpretation by the courts, or cash payments to shareholders in terms of exemptions. But the Section 47 is basically covered under the capital gains, and under capital gains there are certain points where they provide that you don't have to pay for certain amount. Okay? When we talk about the taxation not being given, so what are we going to do about this? Whenever such a thing happens, then the answer would be uh, flexibility in the interpretation of by the courts. In this case, under the section 47 of the Income Tax Act, this provides the particular. There's a lot of sections and subsections in this area where they talk about this entire portion where the businesses are buying and selling someone now. So in this case, if they are just changing their assets, then it would not be treated as a particular point where they're looking forward towards taxability. Okay. So this part will go wrong. Done. Then that is why when we talk about the because everybody will give their share. Matlab, if I want to give certain consideration, my consideration cannot be the same. It can definitely vary from time to time. So in this case, when we talk about the term consideration, it can be the flexibility in the interpretation by the courts. Why do the countries enter into bilateral double taxation avoidance agreement? Why do they enter the DTAA, everyone? To increase tax revenues, to limit taxing rights and avoid double taxation, to promote aggressive tax administration or encourage overlapping of tax claims. Double taxation avoidance agreement. The avoidance simply means that this is basically which they do not want. Because if a particular person is facing tax in both the countries, why would he disclose that information? What would happen if I give my particular information to everybody and ultimately I have to pay a lot of money for that? It's just not worth it, isn't it? When I pay, if I buy something from, say, USA, and then I have to pay tax in USA as well as I have to pay tax in India, what will happen? Ultimately, this particular person will also always feel ki, when we talk about the double taxation, the person would feel ki, क्यों ही दिखाना? Why should I even show it? है ना? So in this case, the correct answer comes out to be to basically avoid the double taxation. ठीक है? The answer is you want to limit the taxing rights. How do organizations have the rights and avoid taxation, double taxation? The point is, if there are so many taxes and the people are not encouraged to disclose their information, they will stop disclosing their information altogether and they will start hiding their informations, which is not good for the organization at all. Done, everybody? Got the point? Now let's move on to what's the next point. What is the crucial for a buyer to determine when making a payment to seller in cross-border transaction? Seller's credit history, tax withholding duty existence, exchange rates, or legal transaction of a seller. Seller's credit history. Is it the point? Whenever we're making a payment, or tax holding duty existence, exchange rates, or legal jurisdiction of that particular person. In this case, the crucial role which plays in this particular area is tax withholding duty existence. That is more important for anything else. ठीक है ना? This plays a better role. Now let's move on towards the next question. Because tax holding is something which is required. But this also creates a trouble. Think about it. If you have to pay to both the places, then you will be in trouble so much. Next question. What is the current trend of India regarding FDI? But the FDI wasn't really allowed before 1991. We allowed it after 1991, and earlier it wasn't allowed 100%. Now there are certain sectors where we have opened up the particular countries, and then that is they are coming into our country and from the direct route. What's the answer? Declining FDI, stabilizing the FDI from all the countries. If you decline FDI, from where you will get the money? Stable FDI from all the countries or growing FDI or limited FDI opportunities. Foreign direct investment is a money which is good for the country because there is too much of Acha, when we talk about the foreign direct investments, is we're bringing a particular country to our country and we want them to set up these areas in our country. You know, so in this case, what's going to happen is if we do not provide them the opportunity to grow, how will employment opportunities enter a country? How do people grow further? Sometimes their own businesses might not be going that well, and, or the business model is completely wrong. When we get FDIs, then the things definitely change, even the management. Then is growing FDI from various countries. If when we talk about this particular area of FDI is basically getting the money into our country. Na? That means we are growing FDI from various countries. This is what we would want. We won't want to get stuck at 300. Right? The answer is growing FDI. Next question. Which three countries of FDI accounted for more than 50% of FDI in India? This was very interesting question. China, Japan, and USA, Singapore, Mauritius, and Cyprus, or Australia, Germany, and the last one is Canada, and last one is D, Brazil, South Africa, and Russia. Then what's going to be the answer? In this case, the correct answer is going to be Singapore, Mauritius, and Cyprus. The answer to this question is Singapore, Mauritius, and Cyprus, everyone. This is a question that I've dealt in earlier classes as well. Uh, these three countries had been maximum providing us foreign direct investments. No other country has really given us so much of FDIs. Technically, if you go back to Singapore, na, Singapore didn't prepare any of his areas. What they did was they gave all these rights to other countries, so which came into their country, prepared their entire country, and when once they received their money back, they went back to their country. So you got the coolest technology, and you also paid them well. Then Singapore, Mauritius, and Cyprus. Which is the last step for acquisition method, everyone? Acquisition means the purchase method. Identifying the acquirer, determining the acquisition date, recognizing and measuring goodwill or gain from the bargain purchase, or measuring identifiable assets. Acquisition, everyone. Last step for acquisition. When you are buying something, the last step is when you are finalizing the thing and then you are just taking it up. But before that, what will you do? You will recognize the goodwill and you will try to find out at a good price. Why would I like to pay more? Nobody wants to pay more now. We would like to pay as less as possible. Otherwise, how will we grow further? You know? Then comes where can detailed explanation of each step in the acquisition be found? International accounting standards, or it is given in IFRS, International Financial Reporting Standards, or it is shown in GAAP, generally accepted accounting principles, or INDAS, Indian accounting standards. Everybody, what's going to be the answer? When we talk about the details explanation of all the acquisitions, it is now under INDAS. Earlier it wasn't, up though it is all about INDAS. Done? Under Ind AS, what is alternative to recording investments at value for the buyer? Acha, we are looking from the point of view of buyer, everyone. Bargain purchase method, amortization method, cost method, or impairment method. Under Ind AS. What is the alternative to recording investments at a fair value? When we are trying to write it at a fair value, then it is always the cost method. At what price did we buy it? You know? Then while it is being sold, then uh, then what happens when it is bought or sold? Then the scenario is basically meant in such a way that you understand what is the true value. You will be adding up your goodwill, and then you will be selling that particular property. Otherwise, you won't know. And after this, the next question: which method must be used to account for the business combinations under international financial reporting standards or generally accepted accounting principles? Bargain method, acquisition method. Acquisition is also called purchase, fair value, and cost allocation. What's going to be the answer, everyone? The method which is basically combination, the best business combinations of international financial reporting standards and GAAP. The best is bargain purchase. When you're buying something, you would obviously want 100% control of it, and the best part is if you negotiate well, you can actually reduce the price. The valuation can be done on a genuine basis where you won't face any problem. In the acquisition of US cable operator, Cable Vision, I'm sorry, by French telecommunication giant Altice, how was the 17.7 billion deal financed? This is more or less, this is a question which is based upon the example which is given in the book. In this case, what was the correct answer? The correct answer was actually C. By any combination of bank financing, cash on hand, or new equity offerings. Any of these would do. Okay? Next, what financing options are available to acquirer in M&A? Issue of equity shares, internal accruals, the short-term loans and advances, and issue of convertible or non-convertible debentures. See, if you bought something, then what will happen? If the financing options are available, if the company is opting for merger and acquisitions, then it can use any of these methods. They can go for equity, they can go for debt, they can also go for the hybrid, that is preference shares. They can also get long terms, they can also take short term loans. So these two things can be set off. And issue of the convertible and non-convertible debentures, the debentures which can be converted into something else, or that is equity, and the debentures which cannot be converted, they will also be stated to you. In this case, what's going to be the answer, everyone? The answer to this question is all of the above, everyone. Why would we have only a few options? Every single option is to be chosen because ultimately this will ensure that the merger and acquisition is getting successful. Otherwise, the organizations will never be able to grow. Good morning, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I'm with you with the area of ABFM. Okay, everyone, what are we going to deal with today? As we were already done with the entire module C, so it's all about the revision classes for this particular entire module C. Overall, house module C is a mix. That's what I would say. It's a mix of good chapters and bad chapters. Good chapters in one sense that in the good chapters, what do we do? In the good chapters, we have numerical plus theory, which is very easy. And then in the bad chapters, or I would say there are no bad chapters, but a little difficult ones, where we have both. That means where we have difficult parts as well as easy parts. So in that particular area, we have to be very broad-minded. Ki how are we going to deal with all those chapters, right? So before I continue with this class, please go ahead and like this particular session because uh, You are the source of motivation. So little things that you do is definitely more acknowledged. Acha, everybody, and if you haven't subscribed to our channel, please subscribe to the channel. And if you haven't downloaded the app yet, please download it. It is helpful for everybody as you will be able to get all the updates regarding our courses. If you have already purchased the paid classes, then you can watch all the paid there, and if you haven't purchased it yet, then you can purchase it through the app because you will get accumulated coins which can be used as a discount for you. While we talk about all these things, then we can definitely look forward towards our topic as well. So let's continue and talk about module C altogether now. So each and every question would belong to a different area altogether. Which of the following valuation is the best valuation for owner occupied non-income producing resident bungalow? Uh, Discounted cash flows, direct sales comparison, profit approach, or hypothetical construction plan? In this situation, what exactly is happening, everyone? मतलब one particular thing that is happening is कि पता है, I live in that house. Obviously, if I'm living in that house, one thing that is absolutely clear is that there would be a what? Since the house is mine, there is no income generation on it. And but I would like to know if I would have, then what would have been the value, है ना? Because ultimately, when I'm selling something, it is very important that when I'm selling it, that people would like to buy it even, na? And the valuation of it is known to me, है ना? So if I'm not putting it on a rental basis, how do I find it? Simple. If I know that I live in a sector which is near to the commercial area, one particular area is this, a plus point, near the offices or near the um, major checkpoints of the city, then that's a good point. Next is my neighbors, है ना? If I look at my neighbors, they also have a similar house and they decided to sell it. They had been keeping on rent while I was always living in the house, but they gave their house on rent. Through the rent, their earnings were नहीं मतलब they decided to sell the house. There they had a big ground floor which they covered up to 70%. Then up to 70% of covering we also have. ठीक है, first point check. Then second floor is also prepared. We also have done that. But we have bigger balconies as compared to them on the front side as well as back side. They just have it on the front side. Then we have a plus point here. So we can say कि अच्छा, whatever their price would be, I'll get 5% more. Then on the top floor, they have all the three rooms or three or four, whatever rooms are there. It is completely covered, but we covered the only two rooms and we have kept it that we have kept some terrace area for gardening and all. So they said कि अच्छा, this is where your coverage is a little lesser than theirs. ठीक है? Then somehow we have a greater parking space, they have a little limited parking space. Okay, then that is our plus point. But when they sold their particular area, they had just recently modified their washrooms, and the particular area was made in a very good way. The accessories were awesome, and the place was good. So ultimately, we can add up to 10% on the basis of their false ceilings as well as all these things. So as I said that, what's your price? They said the quote that we were given was 3 crores. Okay, for the entire house. So it would be definitely more than that, but let's just give it that way. Okay, then what will happen? We can give our quote more than that or less than that by adjusting all the things. This is direct sales comparison. Because you're not getting any cash flows, you cannot put any expected cash flows because this is your house, है ना, in which you're always living. When you're living in that house, then it's just not possible to do it, isn't it? That's called direct sales comparison. Which of the following amounts to direct costs and is included in the replacement cost? Material expense, finance expense, legal or license? Direct cost. Direct cost is basically the specific cost which is related to the area of production. पता है? Then material expense is related to the area of raw material that is required. That can be the one क्योंकि financial charges in the finance area. The loan and everything else is in finance area. This is not even included in the cost accounting, but they just ignore the finance accounting. They according to them, finance accounting is already covering it. They are worried about only the cost of production, nothing more, nothing less. Then we have the legal cost. Legal cost is not included again. Again, this is a regular day-to-day expense which you have to do because you have people to cater. And then license cost is also the same. So I will go for the just material cost. Either way you use any kind of working there, this would be the answer ultimately. What are the three main approaches for estimating growth patterns when valuing a company? Acha, when you're valuing a company, then what are the particular models? 2-stage, 3-stage, end stage, stable, moderate, high, current, past, future, and low growth, moderate, and high growth. Growth is bound to happen, but what should be the pace of it? How do we decide it? But basically, na, sometimes the organizations would be because they are getting older or something, they have a stable growth rate. And once you are in the beginning of the entire work, then you have this that is moderate growth rate, and normally we have high growth rate as well when the work is actually in our favor, no? Then it is called high growth rate. Stable, moderate, high. In the three-stage model, what does the interim period represent? What do you mean by interim period, everyone? Interim is basically the one which is related to the area of acha, interim even in terms of the books of accounts na, this is between two financial years. Why do we say two financial years? Basically na, on 31st of March the year end, but during the year if someone felt that nahi, we would like to issue dividend, nahi, we would like to start we would like to uh, do our listing matlab we are trying to get into SEBI's listing and we can raise our money through the public dealings, through the public finances, that is through shares and securities. For that we need to basically for this we need to get ourselves adjusted through the area of the government na? We need them to enlist us, that is interim. Then if we are doing it now, at that point of time we are providing our cash flow statement, our books of accounts, everything has to be given to the SEBI, and when the listing is done, then you get to enjoy the public dealing, the public finances. And during this period you get that particular area. Again, three-stage model, what do they say? This is basically, I told you about the interim period, but what about the three-stage model? Under the three-stage model, what do they say? Under this specific three-stage model, they are saying that a period of consistent high growth, a time to be to get sustained growth, or a period of stable growth, or an interim period for valuation adjustment. In the three-stage model, what does interim period represent? So this is basically a period of sustained growth. Sustained matlab the growth is there, but there's a specific way it has been growing. It's fine. What defines the companies with moderate growth based on the specific area of relative to the economy? Acha, what defines the moderate growth on their rate relative to the economy? Okay, with an 8 to 10%. Acha, we have done this kind of question but in a different way. I hope you remember that. I just remembered it. Equal to 8 to 10% of the nominal growth rate. मतलब ना देखिए think about it. If the soil is good, the plant will definitely grow. In the same way, when we talk about our
when we talk about our economy, if the economy is growing, then obviously the person will also grow. The industry will also grow altogether because everybody has money, then people will get demand of their particular goods in the market. But if the market is down, then whatever you do, if the economy doesn't have money, whatever you do, the money will not be helpful. That's a very normal thing. There is nothing tedious about it. Okay, ठीक है. This happens with every uh, organization. For example, during the COVID period, there were certain organizations which were growing, but as soon as the COVID ended, their growth also stabilized because it was just for that particular period that they grew extraordinarily, and that was the point where they made good money as well. You know, equal to the economy's nominal growth, less than 5% of the economy's growth, or 15%. मतलब this is how the companies have a moderate growth is up to 8 to 10% of the economy. ठीक है. मतलब this is the relative growth rate. If one thing is growing, then other thing will always grow. It's basically one of the basic scenarios. ठीक है. Now comes the next point. What's the next point? This is what effect does the removal of legal barriers to entry have on a competitive advantage? Competitive advantage means I have something which my competitor doesn't have. For example, I'm a person who really loves social media. ठीक है. And then what happens is I see Instagram, I see Facebook, and I see Snapchat. And most of the people who are on the younger side now, they would have definitely used it. But all the people who are currently in the mid age, or the people who are old now, they're all on Facebook because Facebook turned out to be one of the biggest sensations in terms of the internet for connecting people. What happened is the particular era of Snapchat, they introduced something called Streak, which was very fascinating for the kids because they need something now. Streak was basically if I'm sending you a snap, then that particular snap is something which is snap every day I'm keeping on sending it. We develop a streak. That streak is for every single day. There's a fire kind of thing that would be shown, and then it is 1 2 3 so kids find it very fascinating. I had been having a particular snap with someone over 4 years 3 years, and kids had been doing this particular thing of Snapchat was so popular that this particular thing plus the filters introduced had always been the famous of the kids. And then when we talk about Snapchat, which is used by the then Facebook is used by the elders. This is where what is happening. Facebook, Instagram couldn't introduce this streaks for cheese because na, this was something which was patented by Snapchat. So they all introduced the filters and everything else which was similar to Snapchat, but they couldn't introduce one of those things. That was this only, the streaks. So technically, can you see that there are competitive advantages of one organization? That is why, despite not being very big as compared to Facebook, it has been still surviving and thriving in the world. True, enhances the competitive advantage, gradually erodes competitive advantage, has no impact on competitive advantage, causes competitive advantage to vanish suddenly. Um, Now that was the area of patent which they have. What effect does the removal of legal barriers to entry? If you remove the legal barrier, you will lose your uh, legal benefits. If they didn't have the patent wala benefit, then what would have happened? Without the patent wala benefit, they would have faced a lot of problems. Reason that their uniqueness would have been gone. Everybody would have been the same. Everybody is just like each other. So then, how do you have a competitive advantage over other? Even if you lose your patent, even patents are one of the things which are strongest, right? How can management impact the erosion of the company's competitive advantage? Hanji, how can management impact the erosion of the company's competitive advantage? Management is the one that makes and breaks the organization. Always remember that. Your leader is gonna be the one who's gonna lead and who's gonna make the organization grow, and they can definitely hit the organization too. By eliminating entry barriers, by predicting future growth rate, then we have the era of the prediction of growth rate, by developing strategies to make new markets, or by reducing manufacturing costs. What's going to be the answer? The answer in this specific area is related to the area of impact of erosion of competitive advantage. Then obviously everybody in the market is totally same. Then everybody will enter the market. Simple. By developing strategies for new markets. Now it's done. You will want something new. है ना? Done. Let's move on. When making valuations, market based approaches should not be used when the size of the company is insufficient, when a company's assets are lower than its liabilities, in the event that there are significant and unprecedented shifts in the market price, when it is challenging to provide an accurate estimation of realizable value in the event of going concern. When making valuations, see, market based valuation should not be used where the market is too unstable. Always remember, if the market is very challenging, it is very shifting, how can you find it as a base for finding the valuations? The valuations will go absolutely wrong if you're making it through that. That's one of the basic concerns of every organization. So, technically, in the event with that there are significant and unprecedented shifts in the market price, is the answer.
Bhatnagar, and I'm with you with the area of ABFM. What are we doing? We had been dealing with Module C from quite a long time. In the series, we are coming up with the next topic, that is the revision. I think this is the second class for revision. Till now, I'm done with the entire module C already. So all the chapters had been covered sequence by sequence. Uh, One of the most important things to do is please go ahead and like this particular session, everyone. That really brings up that motivation ki yes, my work is being recognized and is being seen by all of you. And if you really like the sessions, then please go ahead and share it as well. Sharing and at the same time liking the sessions, two basic things without which it is very difficult to move forward, right? So please go ahead and do the needful. Now, everybody, what are we dealing with? In terms of modules, C, I've got all the MCQs of the entire module C altogether. So let's look forward to it. Acha, and one more thing. The entire playlist is also there. I think 12 classes of each of these is there. So please just go ahead and review the entire playlist there, because this will be really helpful for you in terms of your examination, right? Hanchi. Done, everyone? So let's move on and talk about this particular topic. What is the primary focus of the market approach and corporate valuation? What do you mean by market approach, everyone? The term market approach is related to the area of um, parity with the market. That means the market value, the current market value, not the future or something, determining the value based on recent transactions or comparable assets, or estimating the worth of the business by comparing it to a similar business sold recently, evaluating the present or calculated current value of the evaluated uh, expected future earnings or cash flows, or last is extracting value by combining FMV of the assets. What would be the point, everyone? Any ideas? What would be the answer? Chaliye, then let's try it out. The answer to this question is determining the value based upon the recent transactions and comparable assets, because we want to know the value as per today, right? This is what we would like to know, because current is basically the current situation. So we would like to know things as per the current scenario, because market value is prevailing. How can current replacement cost we can be modify the book value of the assets? See, if the current price change is such a drastic one, then how can we continue with the same manner? You know, that's one of the basic things, na? The replacement cost is subtracted from the book value. The replacement cost is added to the book value. The replacement cost is used in place of net book value, or the replacement cost is ignored in terms of is ignored in the valuation process. Acha everyone, when you're talking about this part, now there are a few things that we really have to look forward to. Current replacement cost is the cost if I just switch it over and I replace it with something else right away, you know. But the point is, if the replacement value, if the book value has become so scrapped, or you can say it is something which is just not standing in front of the realistic value, then we don't have any other option than taking it to the replacement value, right? So what will we do in this case? We will try to find all this situation, you know, we will try to adjust our book values to the realistic figure, because ultimately the realistic figure is way more important. If the realistic figure is not recorded, then things are really wrong, isn't it? So the replacement cost is basically the one which is related to the area of book value. We actually replace it. पता है? In this case, we have a replacement. It is basically, if we are recording something at the book value, we won't continue with the same book value at all. Then everyone, so we would be recording it on this basis. So the book value, which is definitely something which is no more useful or has become unrealistic, so we'll switch to replacement costs. Then, what may be the disadvantage with medium to heavy borrowings? Heavy borrowings matlab high rate of interest, है ना? That would be the point. If we have a specific issue like that, then what will happen? Lower interest rates is not the thing, then definitely better credit rating. The more the burden is, the more we become more questionable on a genuine note, because it's like if you have taken too much of loans, then you have to show your credibility कि हाँ जी we earn enough कि ठीक है we can pay the money. Next is hindrance in decision making. In terms of borrowings, we would want that there is no hindrance in the process of decision making, and we have higher profits. वैसे तो पता है, when we talk about hindrance in decision making, the point is when you earn too much and you have taken a lot of loans, then you are answerable as to how you are spending. If we take a loan of a major amount now, then the debenture holders have the right to bring up a nominee director. This nominee director does nothing, but he just makes sure that the money given by the debenture holders is not wasted, or is not used or in an undue manner, or is not exploited. So in this case, it may be a disadvantage of companies with medium to heavy borrowings that you cannot take decisions with your own with your own independence. You will have to consult a lot of people, and they should not be annoyed, because if the person who has given you loan is annoyed with you, then why would he give you loan, है ना? So that can create a lot of fuss among the entire people who are working with you. So hindrance in decision making is basically the information mentions that the heavy borrowings are rated a few notches below than with no or low borrowings. which may hinder the management decision making process. How can they take decisions when they have taken a good amount of loan, and always the people from whom they have taken the loan, they are after their lives. You by what time you are paying the loans, how are you paying the loans, everything has to be stated, na? Acha. Next is what principle is the direct comparison approach founded on? Principle of equity, principle of proximity, principle of substitution, principle of continuity. Equity means, acha, always remember, equity does not mean equality. Equity is not equal to equality. Equality means if I have okay, my if my height is 5 feet and 4 inches, and there's someone who is 6 feet and 4 inches. Among us, who should be given the specific ladder to go to a specific height? This person who's already 6'4", if him and I are given the same stool, then for me it is gonna be a challenging thing. For him it is gonna be a very, very easy thing. Why? Because of the height. So what should be happening is I should be getting a bigger stool so that I can reach out to the particular place easily, and he should be given a smaller stool so that he can actually reach out without bending down or hitting his head somewhere. That is equity. You don't give the same thing, but you give the thing as per the requirement. Is it the direct comparison approach? No, it is based upon mutual concerns for each other. है ना? Principle of proximity. Proximity is what? Approximate. We don't know the actual thing. That is principle of proximity. Then principle of substitution. Substitution means what, everyone? Substitution means one thing replaced by another. And then is principle of continuity. When we talk about direct comparison approach, the point that can be taken here is principle of substitution. One thing being substituted by the other. Principle of substitution is the answer. Achha, next question is ABC Corp is a new project with an initial cost of 15 lakh. Okay, $15 lakh. The company plans to finance the project by 50 and 50%. Matlab, there would be 50% debt and 50% equity. 50% debt and 50% equity. Debt and equity. Done. The cost of equity is 12%. That means debt is 60%, 50% of debt. Matlab, okay. First of all, let me tell you the particular method. Then I'll solve it. Weighted average cost of capital is equal to cost of equity into weight of equity plus cost of debt into weight नहीं, cost of debt and this is the weight of debt. ठीक है? So this is equal to cost of equity is 12% multiplied by 50%, the ratio of it, plus 6% into 50%. This is how the particular WACC is calculated. Matlab, we are taking things on the basis of weightage. It's just a coincidence here, the weightage of both the things is the same. So technically you just have to half the weights and you will get the answer. For example, this will turn out to be 60, this will turn out to be 3, so the total comes out to be 9%. Then everyone, the answer should be 9%, 9.5, 10 or 10.5. The answer is 9 or 10. 6. It is 9. 50% na? 12 into 50 is 6 and 6 is 3. It should be 9%, not 10. This is wrong. The answer is 10. Not 10 but 9. In this case, we have 15 lakh to be included in it. The weight of debt and equity is given. It has to be 9. Which discounted cash flow discounts the unlevered unlevered equity. Unlevered matlab without even a single loan on it. Equity cash flow at an unlevered cost of equity and as a discounted value of the interest tax shield on the debt. matlab if this particular part of leverage is not there, what is the amount that we are earning, and then we use the interest as an expense to cry in front of income tax department ki hi I am paying in such a major expense, give me some relaxation on it. That's what they want. Now the answer is enterprise DCF model. Enterprise the equity DCF model, discounted cash flow. Then we have adjusted present value, APV, or dividend discount model. What's the answer? Which discount cash flow model uh, works upon the discounted cash flow? Everyone, discounted cash flow is basically based upon adjustment of the present value. So related to the adjustments, for the adjustments we have adjusted present value. Adjusted present value is basically a model which discounts the unlevered. Unlevered matlab there are no loans. Unlevered equity cash flow at the unlevered cost of equity adds to the discounted value of interest tax sheet on debt. Hanji, done everyone? Okay, everyone. Next question. This is a reasoning and assertion based question. The reasoning question says the relative valuation matlab comparatively are particularly useful when it is challenging to quantify the absolute value of an asset directly. Reasoning is relative valuation involves comparing the asset's value to the prices of similar assets in the market, providing the benchmark based on market's perception. Relative is simply comparing. ठीक है ना? Sometimes you want to know where do you stand in the market, so you compare yourself with the market and then we try to find out where do we exactly stand. So this is true, and our reasoning, assertion and reasoning are both correct, or true but R is not correct, false but R is correct, but last is false and R is not correct at all. We talk about relative. Relative is based upon comparability. Everyone, relative, the word itself says it is based upon the comparability. So in this case, what's going to be the answer? The answer is going to be A only. True, and R is the correct explanation of A as well. Done? Next question. Question says, what is the value of an asset proportional to when all other factors are held consistent? Uncertainty of cash flows, the risk of associated with the cash flows, then the volume of the cash flows, growth and the level of risk associated, and the expected growth. I think I'll go for C. In this case, we get all these things. Because yes, we are worried about the cash flows. See, systematic is the risk of your own market. है ना? Unsystematic risk is when you go and try into their market. Everybody, the volume of the cash flows, the volume of the growth, and the level of risk associated. These are the things that determines the valuation overall, because you are considering a lot of external factors, which is required. Done everyone? Next point. Which one of the following is an estimating the value of intangible assets such as brand names? Brand names is market comparison. We don't compare with the market. Capital investment, revenue discount, or barter system. Barter system is there, but not in case of real. मतलब barter system was there in terms of when there was no money involved. Up to barter doesn't really exist that way. Again, that is one particular truth. but they're still there in terms of capital investment decisions. Why? Because when we say capital investments in the era of intangible assets, when you build up your reputation, that is where you have that candid moments. So that is where when they talk about the intangible assets are basically those assets which are basically open towards that industry and they are attractive. That's why people move towards these areas. So this is the point. Done. Market comparison. Which one of the following is used in estimation of the intangible assets such as the brand name? Market comparison, capital investment, revenue, or barter? The answer is capital investment, everyone. Done, everyone? Next question. What does the PSU disinvestment involve? Public sector undertakings in 1991 went through a lot of problems. They were supposed to go through it because they were already in a good amount of losses. So, a strategic investor or a public buying or a portion or of a parent company. This was a part of disinvestment, a sale of the business division to another company, the transfer of ownership between two companies, or the demerger. The disinvestment means you are opening up your industry for others, right? In this case, an investor or buying portion is of the parent company. If they're looking forward to it, then they are really huge in terms of the working. That's why they are looking forward to such big plans. Anna, so these are just an example, of course, in the book.
Good morning, everyone. Welcome to Officer 24/7. My name is Niharika Bhatnagar, and I'm with you with the area of ABFM. If we're talking about module C in the last class, so continuing with the same level, we are just finishing off our revision. So let's continue further and finish our module C. Okay, the first chapter in the particular module C is related to the corporate valuation. How is market value calculated in corporate valuation? By analyzing the recent transactions in the market, by determining the net operating income of the company, by summing up the fair market value of the net assets, by assessing the number of outstanding shares multiplied by the share price. Corporate valuation means to value the specific organization. What is its worth? Okay, so in this case, the correct answer should be D. By assessing the number of outstanding shares multiplied by the share price. What are the four methods used for determining the value of firm? Market value approach, income value approach, cost value, and enterprise value. Book value, market value, debt value, and equity. And then we have adjusted book value, stock and debt, then direct comparison, discounted cash flow, market capitalization, earnings approach, asset approach, debt approach. What's going to be the answer, everyone? The four primary methods used in determining the value. See, when we talk about the corporate valuation, it's a very important area. When we are trying to value the firm, the first thing that we should do is uh, adjusted book value. We are trying to find the book value after making the adjustments in it to get discounted based. Then we have the stock and debt approach. We have debt comparison, where we compare with one of the similar organizations which exist in the same market. And the last is discounted cash flow. The answer is C. How is the value of land typically determined in the corporate valuation? Subtracting the physical depreciation from the cost replacement, then calculating the market price of the comparable and used assets, assessing the market value as if it were uninhabited and on the market, and adjusting the net book value based on the remaining life of the land. What's going to be the answer? How is the value of the land typical? See, when you are valuing the land, value a land does not depreciate. So, in this case, first of all, we'll be treating as if the land is not taken up by anyone. We'll be treating as if this land is not used at all. So, first of all, we'll be finding that value based upon that. When we have building and all now, then we try to cover it up with the particular neighboring areas as well. What is the value of the neighboring houses and how do we take care of it, right? Done. What is the primary focus of rate comparison in the valuation? Determining the highest and best use of the property, identifying the comparable properties that have sold, adjusting the comparable sales value, assessing the inherent and observable qualities of the property. What's going to be the answer, everyone? Direct comparison method is basically used for those areas where we are talking about those specific things altogether, no? Isn't it? We would like to know what has been the value there, right? Chaliye, let's try and find it out. The primary area is, as I told you, when we talk about rate comparison approach, we would always try to find out the properties which are similar to ours and how they are sold. For example, if I look at any of my neighbors, what kind of properties they constructed and how are they living in that particular property. That is what we'll be covering in this area, right? Identifying comparable properties that have been sold. What components can be added together to arrive at an estimate of the company's value? NPV and intrinsic value, continuing value and book value, value of free cash flow, continuing value, Non-operating assets, salvage value and residual value. When things are added together and we are trying to find the value. Value of first is free cash flow. This is we are trying to find only the cash inflow and outflow. Nothing related to any other non-cash thing. It's a continuous thing, and at the same time, we will also be having non-operating assets involved in it. Right? This is the answer. C. Next question is, what does the cash flow valuation, discounted cash flow valuation, serve as according to Chennai? This is not a passage or something, right? So just removing this part. What does the discounted cash flow valuation provide? But the discounted cash flow valuation agrees uh, that whenever we talk about time value, see, I get money today, I get money after 2 years, the value of the money would be different, isn't it? It's not going to be the same. So how do we work upon this area, everyone? See, discounted cash flow valuation really tells about the time value of money. It makes sure that we are very clear about the time value of money because again, um, it has to be adjusted. है ना? So there are different ways through which it can be done. Not one way. The only method for valuation, this is not one of the methods. This is actually one of the methods. The basic basis upon which all other methods are technique, then there are certain methods which are non-discounted as well. A less effective approach to relative valuation and primarily used in real estate. Uh, then see, this is not the point, this is also not the point. Then after eliminating, the answer would become this. There are many valuation techniques which are based upon discounted cash flow, and rather this becomes the basic. Some are related to it and some are not related to it. This becomes the base again. That brings more clarity. That's the basis upon which all the valuation techniques are constructed. What is the concept of free cash flow to equity in discounted cash flow valuation? Cash flow available to equity investors after all claims have been met, cash flow before tax and interest, cash flows to tenders and preferred stockholders, cash flows available to equity investors before reinvestment. What's going to be the answer? Free cash flows to equity matlab after making, see, equity gets the money after everybody else has got the money. Matlab first of all, debt people, tax people, right? We pay all these things after debt. Then the second thing is, this is in a normal case. First of all, we pay the interest, then we have depreciation, and then we find the tax payable. After we pay the tax, first of all, we pay the preference shares, and then whatever is left goes to equity. So in this case, cash flow is available to equity shareholders after all the claims are met. So basically, this is related to A only. First of all, we pay everybody else, and whatever is left. That's why I call them scavengers. They live on whatever is left. It can be more, it can be less. It has always been their fate. Whatever is left is something that they will get. If it's more, it's cool. If it's less, then they have to settle. In terms of what is the concept for FCFE, everyone? Achha, this is the same question. So go ahead and answer. Cash flows before interest and tax? Nahi, because obviously it cannot include only the interest and tax. Na? It has to include other aspects as well. They said the cash flows of preferred and lenders. It's not about the preferred. It's actually about equity and preference shareholders. So basically, the answer is still gonna be the same. Done, everyone? What is the primary focus of relative valuation? In the comparison of discounted cash flow valuation, predicting future trends, comparing an asset worth or to the prices of similar assets, estimating intrinsic value, or analyzing historical data. The correct answer is comparing an asset worth to the prices of similar assets in the market. We are comparing the assets with the other. Acha, what does a PSU disinvestment involve? Public sector undertakings went into major losses at one point of time. They were forced to go into liquidation. What was the reason behind that? Basically, now many of these units had turned sick. That means their net worth had become so negative that if we would have let these organizations live, that would have caused more problem, not only for them, but eradication of the funds of the entire country would have been done when we would have allowed these kind of organizations to live further, because PSUs had brought so many losses that led to a situation where India had lost a lot of money. So technically PSUs, many PSUs which had negative net worth had to leave, or they had to be sold. Let's talk about that particular part. Disinvestment, the negative net worth, that is called negative net worth. How does it become? The net worth includes your share capital plus your reserves and surplus. है ना? So in this case, if they have too much of accumulated losses, say it is of 20 lakhs, and share capital was barely 10 lakhs. So this has turned negative because of too much of capital, है ना? So what's going to be the answer in this case? The strategic investor of public buying a portion of parent company, the sale of business division to another, transfer of ownership between two companies, or demerger of a division. The answer is A. A strategic investor or the public buying a portion of the parent company. Done? In the make or buy decision, what is the key consideration when deciding whether to produce a component in-house or purchase it from an external supplier? The historical cost, the book value, expected contribution margin from selling the component, or actual cost of contribution compared to purchase price. I'm sorry. Hanchi, what's going to be the answer? Basically, when you are taking a make or buy decision, ki matlab we should prepare the particular thing on our own, manufacture it or buy it. It is always based upon the fact that what is your actual cost and what is your purchase price. It is based upon these two things. Okay. When the considering outsourcing an activity or service, what is the critical factor that should be assessed in addition to identifiable costs? The market price of the outsourcing service,
the competitor's outsourcing strategy, the reliability and confidentiality, commitment of outsourcing agent, or historical performance of the outsourcing activity. The answer is C. The reliability and the confidentiality commitment of the outsourcing agent. ठीक है? The answer is C. How is the value of subject company determined in the relative valuation? Relative valuation मतलब comparing one company with another, है ना? That's how we try to find out the things. What's the answer, everyone? By applying the multiples in terms of the valuation, by using discounted cash flow calculation, by analyzing historical pricing trends, or comparing its market capitalization with industry averages. The correct answer in relative is by applying average multiples. You're gonna compare ultimately, na? What's gonna happen, isn't it? Chaliye, that's it for the day, everyone. But before I end the particular session, everyone, I hope you have taken a look at our courses. If you haven't, then why not? Because at this point of time, we are up to something, and I hope you have reviewed that. Let me tell you exactly what we have done for you. Uh, just a moment. In the CIIB area, we are coming up with another batch, I believe. So you'll be able to see that particular batch soon. See, just go to our website, that is www.adda247.com. Go on to the area of JIB and CIB. Okay, in this area, go on to the area of CIP June 2024. First of all, double validity is going on. Go ahead and buy it because you get it for 2 years, and that too, this is for 6 plus 6 months. So that means you're getting it for 1 year altogether, and you just have to use the code Y541. ठीक है ना? So all you need to do is use the code Y541 and apply it. As you can see, the discount would be given to you of 79%, and you will get it for barely 6823. That means you would overall you are not even paying 500 per month. You know, this is the entire scenario where you are buying the Mahapack. In Mahapack, it includes our regular batch, our revision batch, our MCQ batches, whatever we are coming up with, or even the bilingual and English medium, all the test series, ebooks, and whatnot. Everything is covered there. Once you go for this one, there is no need to look at any other Mahapack because this covers everything. Not even a single penny is required to be paid in terms of CIB if you take this particular pack. ठीक है, so go ahead and